All right, welcome back to Talk Tickers today. We're going to do a deep dive into Agenus's Q4 2024 earnings call.
Yeah.
They're a biotech company developing some really interesting cancer treatments, and their recent call had quite a bit to unpack.
Absolutely. It was a roller coaster for sure. We saw some promising developments, but also some financial challenges that definitely raised some eyebrows.
Okay, so let's start with a quick overview of the numbers. What were the key takeaways from this earnings call?
Well, the headline is that Agenus ended 2024 with $40.4 million in cash, which is a significant drop from the $76.1 million they had the previous year.
Right.
Their revenue for the year was $103.5 million, but they reported a net loss of $232.3 million.
Okay, so that's a pretty hefty loss that definitely sets the stage for a company that's needing to make some strategic moves. Did they address this in the call?
They did. Agenus emphasized their focus on cost reduction. They actually hit their targeted burn rate reduction by the end of 2024 and are aiming to cut it even further in 2025.
Okay, so they're trying to be fiscally responsible. But what's the strategic thinking behind this? Are they just slashing and burning, or is there a method to this cost-cutting madness?
It seems like they're laser focused on one thing, developing and getting regulatory approval for their lead cancer treatment, BOTBL.
Right.
They're essentially putting all their eggs in this one basket.
Yeah.
Which makes it a make or break situation for the company.
Got it. So high risk, high reward. They're tightening their belts to go all in on this BOTBL treatment that makes this deep dive even more interesting. Tell me, what is BOTBL and why is Agenus betting the farm on it?
Well, BOTBL is what's known as an immunotherapy treatment in simple terms. It worked by helping the body's own immune system recognize and attack cancer cells more effectively.
Okay, that sounds promising, but we hear a lot about breakthroughs in cancer treatment. What makes BOTBL stand out?
The CEO actually used the phrase unprecedented clinical activity, and he might have a point. We're seeing some very encouraging data emerging from their trials.
Okay, now you've really got my attention. Give me the details. What kind of results are we talking about?
Well, one of the most impressive findings is that BOTBL is showing durable responses and prolonged survival in patients with something called refractory microsatellite stable colorectal cancer, or MSS colorectal cancer for short.
Hold on a second. For those of us who don't speak oncology, can you break down what MSS colorectal cancer is and why this is a big deal?
So colorectal cancer is cancer that affects the colon or rectum. Now, MSS colorectal cancer is a specific type that accounts for over 90% of all colorectal cancers.
Okay.
And what makes these results so exciting is that these are patients who've already tried other treatments, and those treatments have stopped working.
Right.
So the fact that BOTBL is helping them live longer is a major development.
Okay, so it's addressing a huge patient population and showing promise in people who are running out of options. That's definitely significant. What other data points stood out to you?
Another key finding is that BOTBL is showing encouraging early results in first-line treatment of MSS colorectal cancer when it's combined with the standard of care.
Right.
This means it could potentially be used earlier in the course of treatment, not just as a last resort.
Okay, so it's showing promise both on its own and in combination with existing therapies. Anything else?
Here's where it gets really interesting. They're also seeing complete or near complete pathological responses in something called neo-adjuvant settings.
Whoa. Back up for a second. What does neo-adjuvant even mean? I'm picturing a bunch of doctors in lab coats singing Christmas carols.
Not quite neo-adjuvant, just means that the treatment is given before the main treatment, such as surgery. So in this case, they're finding that giving BOTBL before surgery can shrink tumors significantly sometimes to the point where no detectable cancer remains.
Wait, so they're basically using this treatment to shrink tumors before they even go in for surgery. That's incredible. Are you saying this could potentially lead to less invasive surgeries or even eliminate the need for surgery altogether in some cases?
Exactly. That's the potential game changer here. And to quote the CEO directly, he said, "These results," and I quote, "are beyond promising. They are potentially revolutionary."
I can see why he's excited, but I'm always wary of company hype. Are other experts sharing this optimism? Are there any independent studies or trials validating these claims?
That's a great question, and it's one of the things that makes this story so compelling. Several leading oncology centers and experts are independently conducting trials with BOTBL, often at their own cost.
Wow, so they're putting their money where their mouth is. They must really believe in this treatment's potential.
They absolutely do. This level of independent validation is huge. It suggests that Agenus isn't the only one who thinks BOTBL could be a game changer.
So it's not just internal hype. We've got independent researchers, potentially less invasive treatments, and some pretty impressive data. This is starting to sound like a real breakthrough. But let's be realistic, their financials aren't exactly stellar. What's Agenus doing to stay afloat while they wait for potential BOTBL approval? I mean, they can't just run on hype and good intentions, right?
Right. It's a tough balancing act. They're trying to shore up their finances by monetizing some of their assets, specifically on the West Coast.
Okay, give me the specifics.
Yeah.
What kind of assets are we talking about? Are they selling off lab equipment, or is there something bigger at play here?
Think bigger. We're talking about a manufacturing facility and real estate.
Okay.
They've already secured a $20 million mortgage on some of their properties, and now they're exploring options for their state-of-the-art manufacturing facility in Emeryville. They're considering selling it or leasing it out.
That's interesting. So they're essentially turning property into cash, which is a pretty smart move, especially with a renewed interest in U.S.-based manufacturing. Could be a good time to strike a deal. But I have to ask, how does selling off assets impact their long-term strategy? Is this just a temporary fix, or are they shifting gears completely?
Well, that's the million-dollar question. It seems like they're trying to buy themselves time and resources to get BOTBL across the finish line, but of course it also raises questions about their long-term plans.
All right, let's dig into that. What are their options for getting BOTBL to market? What's their regulatory strategy look like?
Well, they've got a lot of data from late-stage trials showing that BOTBL can significantly extend the lives of patients with MSS colorectal cancer who have exhausted all other options.
So that's one potential path, but it sounds like there might be other, perhaps faster ways to get this treatment to patients who desperately need it. What else are they considering?
You're right. The neo-adjuvant setting we talked about earlier is particularly promising. Remember those complete pathological responses we discussed?
Right.
In over half of the patients, these responses were achieved with BOTBL alone, no chemo, no radiation.
Wow. So they're achieving these incredible results without the harsh side effects of traditional treatments. That's huge.
It is. And this opens the door for potentially less invasive organ-sparing treatments, especially for something like rectal cancer, where surgery is often debilitating. In fact, Dr. Stephen O'Day, their chief medical officer, hinted at this in the call. He said, and I quote, "Rectal cancer is within our sights as a primary first neo-adjuvant sort of regulatory approach."
So they might target rectal cancer as their first regulatory approval. Makes sense. It's a smaller patient population. And the data is incredibly strong. But let's zoom out a bit. What's the bigger picture here? What does all of this mean for the broader oncology landscape?
That's where things get really exciting. If BOTBL lives up to its promise, it could be a game changer for colorectal cancer treatment.
You're saying this could potentially change the standard of care?
Potentially, yes, especially for patients who have exhausted other options, and the potential for organ-sparing therapies, particularly in rectal cancer, is a major breakthrough. Imagine a world where debilitating surgery is no longer the default option.
That's a powerful thought, but we have to acknowledge the competition. The oncology space is crowded. There are always new treatments emerging. How does BOTBL stack up against the competition?
That's a great point. Agenus isn't operating in a vacuum. They're up against some major players with deep pockets and established pipelines. It's a David versus Goliath scenario in many ways.
So what are the key risks and challenges they face? Besides the obvious financial hurdles, of course.
First and foremost, their financial situation is precarious. They're burning through cash. And while they're taking steps to monetize assets and cut costs, it's a tightrope walk. They need BOTBL to succeed, and they need it to succeed soon.
It's almost like a race against time. They're battling not just scientific hurdles, but financial ones as well.
Exactly. And then there are the regulatory hurdles. The FDA is notoriously stringent, and there's no guarantee of approval, even with compelling data.
So even with all this promising data, there's still a lot of uncertainty. And of course, we can't forget about the competitive landscape. What if another company develops a similar treatment that's safer, more effective, or more convenient?
Right. The competition is fierce.
Yeah.
And Agenus will need to stay ahead of the curve to succeed. It's a high-stakes game, for sure.
Well, this has been a fascinating deep dive. So far, we've covered a lot of ground, from the company's precarious financial situation to the potential of their groundbreaking treatment.
Mm-hmm.
I'm already starting to understand why they're making these bold moves. But before we wrap up this part of the discussion, I have to ask, what's your outrageous but plausible trade idea based on all of this information? You know, that little peek into the mind to a hedge fund manager.
All right, let's put on our hedge fund hats for a moment. Full disclosure. This is purely hypothetical, not financial advice, but with that disclaimer out of the way. Let's get a little creative, shall we? Imagine this. You're managing a portfolio, and you're looking for those high-impact asymmetric bets that can really move the needle.
Okay.
You've been following Agenus, you've seen the data, you understand the risks and the potential rewards.
Okay. I'm intrigued. Paint me a picture. What's the play here?
Well, instead of buying the stock outright, which could be pretty volatile given their current situation, how about a more strategic approach using options?
Yep.
Specifically, we're looking at long-dated call options. We're essentially betting that the FDA will approve BOTBL for neo-adjuvant treatment of rectal cancer.
Okay, hold on. Let's break this down for our listeners who might not be options experts. Remind me what a long-dated call option is and how it works in this scenario.
Sure thing. A call option gives you the right but not the obligation to buy a stock at a specific price called the strike price by a certain date. Long dated just means the expiration date is far out in the future,
Right.
giving the underlying stock plenty of time to move.
So we're basically betting that Agenus' stock price will be significantly higher than the strike price by the time the auction expires, and we're giving it a longer time frame to play out because of the lengthy FDA approval process. Makes sense. But you also mentioned something about hedging. Don't we want to go all in on this potential rocket ship?
Remember, we're in the biotech world, and things can get a little messy. What if the FDA throws a curveball and rejects their application? What if a competitor emerges with a superior treatment? We need to protect ourselves on the downside.
Ah, yes, the voice of reason. So how do we hedge this bet? Do we buy a bunch of antacids in case this investment gives us heartburn?
Haha, not quite. But I like your thinking. Here's where it gets interesting. We can simultaneously buy put options with the same expiration date as the call options.
Okay, another options lesson for our listeners. Remind us what a put option does.
Think of it as the opposite of a call option. A put option gives you the right to sell a stock at a specific price by a certain date.
So we're buying the right to sell a Agenus stock at a certain price just in case the price plummets. Basically, we're setting a floor for our potential losses.
Exactly. It's like insurance for our bet. If the FDA approves BOTBL and the stock takes off, we profit from the call options and the put options expire worthless.
That sounds like a win-win. But what if things go south and BOTBL gets rejected or faces unexpected delays?
Then our call options would expire worthless, but our put options would become valuable because we could sell the stock at a higher price than the market price, minimizing our losses.
Okay, so it's a calculated risk. We're strategically positioning ourselves to benefit from the potential upside while limiting the potential downside. But why long-dated options specifically? Why not go for a quicker turnaround?
Because regulatory approval processes, especially in the pharmaceutical world, can be lengthy and unpredictable. We're not talking about a quick turnaround here. We need to give Agenus enough time to jump through all the FDA hoops and potentially even secure approvals in other markets.
That makes sense. Patience is key in the biotech game. So we're essentially betting that good news, whether it's FDA approval or positive data from ongoing trials, will push the stock price up significantly within the time frame of our options. It's a clever strategy. I'll give you that.
Right. It's all about timing and understanding the catalysts that could drive the stock price. Of course, this is just one hypothetical scenario. There are countless other ways to play this depending on your risk tolerance investment goals and how much you believe in those singing doctors in lab coats.
Very funny. Okay, so we've thoroughly explored the financial side of things and even ventured into the exciting world of options trading. But let's zoom out a bit. What does all of this mean for the broader oncology landscape? If BOTBL lives up to the hype, what kind of impact could it have?
That's what makes the story so fascinating. If BOTBL truly delivers on its potential, it could revolutionize the way we treat colorectal cancer, particularly in the neoadjuvant setting.
You mentioned earlier the possibility of less invasive surgeries, even organ-sparing therapies. That's a huge deal for patients facing a cancer diagnosis.
Absolutely. It could change the paradigm of treatment, improving quality of life for countless patients.
It's almost hard to fathom, right? But we can't just assume this is the guaranteed success story. What are some of the challenges and risks they might face, even if BOTBL is as effective as it seems?
Well, for starters, their financial situation is still a major concern. They're burning through cash, and while they're making moves to improve their financial stability, it's a tightrope walk.
Right. They need to strike a delicate balance between funding their research and development and staying afloat long enough to see those efforts pay off. It's a classic biotech dilemma.
Exactly. And then there's the ever-present regulatory risk. The FDA has strict standards, and there's always a chance that BOTBL could hit a snag in the approval process, even with all this promising data.
So regulatory hurdles, financial pressures, and fierce competition. It sounds like Agenus is facing a real uphill battle.
They are, but they also have a potentially groundbreaking treatment with the potential to change lives. It's a story of high-stakes scientific innovation and a whole lot of uncertainty.
Well, we've given our listeners a lot to digest today. A company with potentially revolutionary treatment, a precarious financial situation, and a whole lot of potential. Well, before we wrap up, I want to bring it back to our listeners. What should they be paying attention to in the coming months? What are the key signals that could indicate whether Agenus is swimming towards success or well sinking? So for our listeners who are following this story, what should they be looking out for in the coming months? What are the key signals that could indicate whether Agenus is on the path to success or heading for trouble?
Yeah, I'd say there are three key areas to keep an eye on. First, their cash burn. Are they able to further reduce their burn rate as they've promised? Are they making progress on monetizing those West Coast assets? Those are really crucial indicators of their financial stability.
That makes a lot of sense. Cash flow is everything, especially in the biotech world. It's a cash-intensive industry. What's the second area we should be watching?
Regulatory updates, any news regarding potential FDA meetings, trial designations, or even early approval pathways would be significant. Keep an eye out for any press releases or SEC filings related to their interactions with regulatory agencies.
Right, because those regulatory milestones can be major catalysts for the stock price, either positive or negative. What about the third area? What else should investors be tracking?
Data. We need to see more mature data from those late-stage trials, particularly the neo-adjuvant rectal cancer study, continued positive results, especially those showing durable responses, and that organ-sparing potential would be extremely encouraging.
It's all about proving the concept right, showing that BOTBL can deliver on its early promise, and not just in the lab, but in real-world patients.
Exactly. And remember those independent investigator-sponsored trials we discussed earlier? Keep an eye on those as well. Positive data from those trials would provide further validation and potentially even attract the attention of bigger pharmaceutical companies looking for partnerships or acquisitions.
Ooh, now that would be interesting. A big pharma buyout could be a huge win for China's investors. Okay, so we've got cash burn, regulatory updates, and data readouts. Anything else our listeners should keep in mind as they follow this story? Any words of wisdom for those who might be considering an investment in Agenus?
I think it's crucial to remember that biotech investing is inherently risky. There are no guarantees in this field, and even the most promising treatments can fail. It's essential to do your own research, understand the risks involved, and never invest more than you can afford to lose.
Wise words. We can't stress that enough investing is a marathon, not a sprint. And it's important to approach it with a level head, a long-term perspective, and a healthy dose of caution.
Absolutely. We're here to equip you with the knowledge and insights you need to make informed decisions, not to tell you what to do with your money.
Well said. So until next time, stay curious, keep learning, and as always, this is not financial advice. Do your own research consult with a financial professional. And remember, Talk Tickers is just one tool in your investing toolkit.
We'll be back soon with another deep dive into a fascinating company or trend shaping the financial world. Until then, happy investing.